support and resistance is the basis of technical analysis, and everyone should have that understanding of drawing support and resistance line, right? So all you have to do is on your left there's a trend line, right? So you click on that option, click on the trend line option, and you can draw your support and resistance. Okay, what do you want to draw? So you want to draw lines that encapsulates the motion of the trend. Okay, let me draw, then I'll show you. Okay, it's a very subjective art of drawing support and resistance, but it's very important for you to know so that you can look at the range of prices. Okay, this is what you call a resistance, right? So resistance means that usually when prices go, as in prices touch this point, right, usually it will go back down. For example, you can look at here, the recent price, it goes back down. It tries to go up, but it goes back down, right? So this forms what you call a resistance, right? So usually what you want is a few points at which there are that the prices actually challenge this resistance. So first is, you can see first point, usually this two, second, third, and fourth. Usually you want three or more points to which you can draw the graph, right? So to further validate this movement. Okay, next is this. You can see an obvious, yeah, right? So you can see there is a lot of trading around going here, right? So this is what you call a support line. The top is resistance, because once prices go up, it can be, as in once it hit the resistance, it goes back down. But support means that this is the point at which prices usually bounce off and reverse, right? Except for this is an anomaly, right? So what we want is a general line of support, and it can even be here, right? Because there's 1, 2, 3, and 4, right? So this is in general, this is a support line at which once prices touch, it goes back up. So this is the kind of lines that you want to draw in a general graph in a weekly, right? So let's try to draw some more. You can draw as many as you want, because this is a very important indicator, this support and resistance, because it shows at which point the prices will fluctuate within. So it's important for you to do this, right? So if you can see, this is essentially support and resistance. So if prices move near for example, if prices are here, it reaches its support here and it goes up, right? So usually it will test this is the resistance, right? At first, from a support to resistance, right? Usually prices will tend to challenge the resistance before it changes over to become a support for this resistance, right? So then once prices have usually tested the resistance, the former resistance line, it will become a support for the prices. So once the prices shoot up, then once it shoots back down, once it comes back down, it becomes a support, a new support. The next line becomes a resistance. So once you've formulated the support and resistance lines on a longer term basis, you can look at it at a daily basis, right? So now you can see, okay, this is prices will move generally. Look at that, you can actually see at which the prices are very sensitive to these lines, right? So when prices are going up, once it reaches what line is this, 0.0002, it falls back down to this line, which is 0.0012, right? So you can see there's kind of an inclination of sensitivity of the traders. So once they reach this line, for example, you can see this is quite obvious. But here, look at that, the prices try to go up, right? The next moment the candle is a bearish candle, it forces prices way back down, right? So the support and resistance is a very good indicator. It's a very good way for you to actually monitor the range of prices at which it's supposed to go. So you can see that now the prices are depressed and it's testing this support, right? So it's testing, so it can move both ways. It can go up again to test this resistance line, or it can go down to test a further support line. But you can actually see the ranges of prices and actually formulate a decision based on that, right? So it's important for you to do this because so that you can look at the trend analysis, right? So the prices are moving at the lower range, or are they moving at an upper range? So if we are at this point, all we need is a further a confirmation. If the next daily candle is positive, there's a highly likelihood that the prices are going to go up. And if you wait for the next candle and the candle forms as a green positive candle, it's a bullish candle, then assume that you buy here and you ride it all the way to here, and you can sell off. Or perhaps if you think that the price will breach this resistance line, then you can hold, so this allows you to make better decisions, so that you can know the range at which historically the price are very sensitive to. And this is and usually a psychological tip is that usually psychologically round numbers are usually a very good support and resistance line. For example, this is very close to 0.002, right? So usually prices, if it's like 100 or 200, or if it's a whole number, then it's a good place for a support and resistance line. So this is how you do support and resistance. First, you have to do look at the ranges, do the support, the actual resistance line and the support lines. Then you can draw any other lines in between just to look at the historical sensitivity of the prices. At the long term, usually I would recommend a week. Then if you go on a daily basis, you can even draw further lines, just to look at the deeper level. So if you have drawn that line effectively and you want to trade, for example, in an hourly, you can see that, okay, prices are about to bounce off of this support line. I wait until the next confirmation and I can buy. So this is a very good indicator for you to understand the prices, right? And usually formulate that into a trading strategy. And with the combined with the charting patterns, combine it with support and resistance, then you are fairly close to mastering the art of technical analysis. All you need is some practice and familiarity with that, right? So our next video we'll be talking about charting, more recognition of charting patterns in general. What I taught you just now was analyzing charting candlesticks. Next one is analyzing charting patterns on a general macro level, right? So hope to see you then. Thank you.